So shall we start, sir?
Give me a minute.
Yeah.
Yes, sounds good.
Okay. Okay. All right. So good evening and welcome back to our Exfil channel where we discuss the issues and trends on in the oil and gas industries. For those who are new to the channel, kindly like, share, and subscribe to stay updated for more. So here we have with us once again Mr. Pranav Kanth, Director, Corporate Development and Strategy. He is a qualified expert in the oil and gas sector, owing largely to his experience in Total, PP, and Apar. So how has the weekend been going on, sir?
The weekend has been nice and looking forward to the fresh new week. It promises to be an exciting week ahead, volatile and complex.
Great, great, sir. So this week, the Brent crude oil prices have breached the US dollar 110 mark again. What have been the factors driving this increase?
The factors have been simple. In one word, as I said, volatility and complexity that has been driving. But on the balance, it clearly suggests that the risk onto the supply side emanating primarily from the Russia-Ukraine conflict is overpowering the demand side fundamentals, which do not look as buoyant as was expected. So yes, the supply chain risk seems to be overpowering the the demand the demand risk, with which is reflected in the China's continued lockdown and the demand destruction. And China is the single biggest factor in terms of the growth of the crude oil consumption. And so that is clearly a bearish factor. Secondly, US has reported an increase in the weekly crude inventories, which again is reflecting kind of lower consumption than what was expected to be. But it has to be kept in mind that this lower weekly crude inventory, this higher weekly crude inventories, I beg your pardon, is to be seen against what it was 1 year back. So it is significantly lower currently. And on a 5 year average as well, the inventories are much lower. So it has to be seen in that light that while the weekly inventories have gone up in US on a 1 year basis and 5 year basis, it is still significantly down. And the retail pump prices in US continues to hover above $4 per gallon, and that is always weighing onto the administration and the government as to how to mitigate that. So all that SPR release and everything has been primarily towards that, and that applies across most of the economies, with the recent news being from Japan, where it has released 6 million barrels of oil from the private reserves. So all these are a growing trend to mitigate the retail fuel pump prices. And yes, these have been the factors which have led to the increase in the Brent oil prices inching upwards, primarily onto the supply side risk.
All right, all right. So where do you see the prices heading to next week?
I I believe the supply side risk would continue to overweigh the fundamentals of the oil market. We have the recent development of UK Prime Minister Boris Johnson making a visit to Ukraine during this conflict times, which is quite extraordinary. This is unlike President Biden's visit to Poland, which is all said and is a neighboring country, not the conflict country. So, and he is likely to visit India next week. So all these are leading to ratcheting up of the diplomatic and the other tension, and conflict reports coming out from the war zone does not appear to be coming down, or it seems to be getting escalated at every level. So that news is not good in the sense it is going to lead to more supply side risk. So that is going to be the overpowering factor looking forward. So we assume it to be remaining at the current elevated level, which is at about 110, for the Brent. And interesting part we are trying to keep tap on is the recent news of China's largest offshore oil and gas company, CNOOC. It is reported to be preparing an exit from US, Canada, and Europe. Now, this portends a likelihood of the secondary sanctions being deployed towards all the companies and economies which would be trying to circumvent the primary sanctions of Russia. So all these news lead to more risk onto the supply side. So we would expect it to be between 110 and 115 for this week.
All right, all right. Thank you so much for the great insight, and glad that you could be here with us this evening. So for
My
all,
pleasure.
yeah, yeah, sir. So for all those who are watching, thank you for subscribing and kindly share this video and follow us for more. Thank you.